Welcome to the latest emerging payments hot topic briefing on payments meets blockchain in APAC. My name is John Ryan. I'm one of the Director Generals of the Emerging Payments Association, and you're all very welcome to today's session. I'm joined by the Co-Director General, Camilla, and we've got an exciting panel all lined up for this great topic. This is very much a first of event for us around this very important topic of blockchain. So we're very excited about today. For those who don't know Emerging Payments Association, we are the leading payment association in the region, and we're all about improving the lives of everyone through payments. And we do that through bringing the payments community together to collaborate around the key issues in payments. And we run research projects and also events such as this today. So today's session has come about through many discussions that myself and Steve Vallis have been having over the past year, monitoring the issues where blockchain and payments have been coming together, and particularly post the last year, where we've seen payments and the digitalization of payments really rise to the fore. So we're on a very rapid pace in this discussion and in this particular topic. So we really feel the importance and the need to come together. But we've got a great panel lined up across the region as well, representatives coming from India and China. So that there's plenty of good discussion ahead. Today's session will be focusing on not particularly the technical aspects, but it'll be focusing on the payments elements and where they are starting to meet into blockchain. When we talk about blockchain and payments, we are going to use the term Bitcoin to describe that decentralized network and that purest sense of an original form of payments on the blockchain. But we may also interchange and talk about CBDCs, central bank digital currencies, that we are starting to see as emerging topics. And we may also touch on stable coins, where we're seeing digital currencies being represented in this blockchain environment as well. So without further ado, I'm going to now hand over to invite all the panelists to switch on their camera. And I'm going to ask each of the panelists to give us a brief introduction and to also give us a sense of what they understand blockchain meeting payments is. So Camilla, I'm going to hand over to you first of all, please.
So thank you. I was keen having my camera on from the beginning. So hello, everyone. I'm very excited to be here. So I'm the other Director General at the Emerging Payments Association. And just as John was saying, I find this really exciting to collaborate with the Blockchain Australia and with the blockchain community around payments. Because since we launched the Emerging Payments Association 3 years, the buzz around blockchain and Bitcoin has really, really grown. And you had a lot of naysayers in the beginning, but they are less so now, and they're also less vocal. And that's even all the volatility we've seen in currencies like Bitcoin. And I see even of the interest of having this event today, that we had closer to 1,500 people interested on LinkedIn. But it's not the number, but it's actually who. So I've been looking and scrolling through the profile, and a majority of you on the line today, thank you everyone for joining, but you are from the traditional payments industry. And I think that says so much about the sentiment in the industry. And in general, we just see the payments industry is pushing for innovation on a broad front, and they're doing so at the same time as they adopting really well to new regulations coming out, and adopting also to upgrade an infrastructure and technology. So it's a very exciting time. And as we know, payments are in the cloud now, and we could more or less call ourselves cashless to a certain extent. I'm not saying across all. We are digital and we are mobile. And that is why we have this hot topic briefing today, because we see that the payments industry is adopting Bitcoin for settlement now. So it's really exciting. And we do see, though, and this is where the EPA comes into space, and we find it's interesting is also to translate this, because we see that the regulators are lagging a little bit behind where the industry are. but they are catching up. And across APAC in general, you can see that the regulators are adapting their regulation and is incorporating crypto and wallets into regulations updates. So very exciting there. You will hear me using the word exciting a lot of times today. That is one of my favorite words, I think. Anyway, super excited to be here today. And over to maybe Monica, do you want to follow me?
Hi, I'm Monica D'Souza. I'm from India and I do follow the Asian landscape, and very excited to be here and talk about a subject that I've been interested in as well, to really understand what does blockchain solve in payments. But thankfully, because of everything that's happening in the world today, and especially in India, with its own digital currency being launched, and of course, with Asia leading the way in terms of not just China with their own CBDC, but also others who are following, including Singapore with Project Cuban. It's a very exciting time to not only understand how the layered innovation approach is going to work, but how blockchain will get mainstream acceptance. So it's going to be an interesting session. I'm really looking forward to it.
And Steve.
John, Camilla, thank you very much for the opportunity to participate in this event today. I'm the CEO of Blockchain Australia. We're an industry body, we're a member organisation, and I think it's important to know today that the businesses that I represent, the conversations I have, are largely not blockchain businesses. They're not DLT cryptocurrency businesses. They're businesses that are adjacent to this conversation. So I think that's why it's particularly interesting for me to talk about payments, because many of the businesses that I speak to are payments businesses that are grappling with their concerns around this space. So my aim here today is to create a dialogue. I'm not here to sell tech either. That's the key thing I think that's lost in most of these rooms. Most of the people that I deal with in this space do not seek to sell you a solution. The reality is they're saying there are puzzle pieces that need to be put in play. Some have arrived, some are on the horizon. Where does it fit within your own business? So I'm looking forward to an active conversation. I would encourage people to ask lots of questions, and hopefully we can bust a lot of myths today about where this technology is or isn't and how it's being perceived.
Great, thanks. I just want to get Max to speak. I have a problem getting Max up on the stage now, but Max, can you hear us and can you talk to us now?
Yes, I can hear you very well.
So please, we'd love to hear from you and your perspective on blockchain and meets payments.
Thank you very much. Welcome everybody. Thank you, my the fellow speakers. I am from Argentina originally, based in China for the last
Sorry, I beg your pardon. So Max is just coming on as a panelist. Sorry, there you go, Max. Please repeat again.
Yes, I'm here. I cannot get the video, but
yep, there you are. Your video now. Yeah.
Okay. So I was saying I'm based in China for the last 17 years. I came to open the M&A office of Ernst & Young cross-border specifically. Right now, I am running a bank in China, Argentina National Bank, one of the only 20 foreigners with a banking license in China. And I've been one of the first users, probably the first user of the digital renminbi of China. As you guys know, and this can bring a lot of questions to the table also, digital renminbi is a proprietary technology of People's Bank of China that has connection with crypto. Digital renminbi is not crypto and it's not blockchain based. It's a very similar technology as blockchain, but it's not in nature blockchain. And this will open, I believe, to the panel and to the public a lot of questions. Basically, the Central Bank of China, PBOC, recently, 4 weeks ago, stopped the possibility of people inside China to move money from exchange to any bank account. So we are experiencing, and because of that, we saw the dramatic drop of Bitcoin from 65,000 to 29,000. Now it's a little bit in recovery. I was checking, it's around 46, 47 at the moment. So again, I I'm living in China. I'm planning to live in China for the next 10 years. I have 2 kids that go to Chinese school. So this is my background.
Great, thanks very much, Max, and apologies for those technical issues, but we'll crack on with this now. So just to warm the room, we just want to take a quick poll and get some sentiment around Bitcoin specifically. So if you wouldn't mind, we'd like to everyone just to see if they could look at their screens and address the question here, which is, when will Bitcoin no longer be a currency? And really what we're trying to get a sentiment about is, the naysayers do say that Bitcoin is not for the long term, but yeah, we certainly like to get that feel from the room. So we'll just give you a quick minute to give us that. Can everyone see the poll, or is that just me? That's just, you can see it? Okay, good. Okay.
Yeah.
Okay. All right, so just give that another 10 seconds. We're going to close that off. So 5, 4, 3, 2, 1. Okay, right, let's end that poll. And we're going to share the results. So I can see that it's 41% for never, and only 3% say in the next year. So it seems like we're going to be having this conversation for some time to come. So I'm just going to jump in with some questions. I'll just leave that poll up there for people to just keep having a look. So we'll just go into the first question, which is really to ask the panel, what is the relevance of the concept of decentralized versus centralized payments? Can I just maybe extend that question to Steve first, if you want to just kick us off with that, please?
Thanks, John. It's one of these things about the way the language characterizes this technology. In its truest form, people speak to it in a narrow way. It should be decentralized, distributed. It should be immutable. Should have all these characteristics, which mean it's a very different way to do things. The reality of where most of the conversation lives, in my world, I think in everyone's world, is business as usual. With an iterated better outcome. That's distributed ledger technology predominantly. It's something that is not as private as government, people not in government would like, but private enough for government and business to be able to deal with. It's distributed enough that lots of people have access, but not so distributed that people can otherwise disrupt the system or otherwise. So they're sort of the opposite ends of the spectrum here, the difference for me that is decentralized and not decentralized. Each one of these things provides an architected outcome. And I think this is one of the challenges when we talk about this subject matter. Most people bring their own frame of reference into this technology. They think it's a thing. And my position persistently is, what outcomes do you want? What networks would you like this shared into? How do you attribute value? What do you want the things to functional outcomes such as, retrieving money, kicking out bad actors? Who controls these things? Do they control these things? They're all questions that you need to give consideration to in architecting a solution. But consider the opposite ends of that, one which is an entirely decentralized, distributed outcome where people say, no one controls it, so ultimately everyone gets to say, or entirely centralized. So effectively pick your team. We live much closer to the team that is the centralized outcome. The question for us will be over time where we migrate.
Anyone else? Great. Okay.
John, I'd like to chime in on this one. I think there is one thing that Steve said, which is very critical about decentralized versus centralized and what the frameworks are and what reference we use. But essentially, decentralization is driven by the trust deficit that many actors in the system continue to blame governments and regulators for, which is about intermediaries being present in the payment transactions as they are architected today with the traditional rails that we have. So decentralization takes the trust into the hands of the owner, almost empowering the user with enough people who will trust them and they will trust enough, but there will be lesser visibility and transparency to others, specifically those actors they want to keep out. But that's exactly what the governments are fighting against, because without that compliance overreach that they need to have into payment transactions or any other kind of transaction, it becomes very difficult to regulate. So I think this tussle and war is going to continue. And that's why when Steve said the frame of reference is very important, because one side will say, this is exactly how it should work. And the other side will say, this isn't how it should work. And it is. So it's a very interesting paradigm.
Exactly. Yeah. And I appreciate that regulation point. We'll certainly jump onto that shortly. So can I just, one of the things that we talk a lot about in payments world is digital currency, and I believe they've been around for a long time, really, but they certainly stepped up. But can somebody just for the audience, just to set that scene, the difference between a digital currency and a cryptocurrency right now?
If you allow me, John, to make it very simple, when we talk about central bank digital currency, we are talking about centralized and, let me say a word, controlled and compliant digital way of payment. Basically, it's exactly the same notes that we have in paper, but in our phones. I brought my phone now, so I will share with you guys, and I will let you the digital wallet of the Central Bank of China that it was launched last September. That is the one I've been using, and as you can see, as we are speaking, it takes me 2 minutes to get online, to get validated, and you can see very clear in the camera, I have 128 renminbi. I think the audience can see, guys can see that 128 renminbis are exactly the same as digital banking notes, paper notes, but in the phone. Let me tell you big differences between this digital currency and other ways of payments. First, tracking from the central bank. Second, tax purposes. Tax authorities will be able to control payments. Third, offline payments. If your phone gets out of the network, you can pay anyway. Fourth, there is a token coming very soon. I don't have it yet with me because it was not delivered to me, but we will have a token similar to the tokens that we use now, for example, to access to the banks, to the networks of the banks, and with the token we'll be able to pay. This is for the concept of democratization of banking. It's calculated over 100 million people still in China from the 4.4 billion that have no access to banks. They will have access to banks. But then the most important things go with 2 points. First, zero commission for vendors. This is a very, very, very big issue because today in China, we pay with 95% of the transactions are done by the phone with WeChat and Alipay. Today, they charge you a very small amount of money if you are a vendor. In the future, that will be zero. So when we have that into consideration, imagine that the vendors themselves will be the interested party to push for digital renminbi. And I will tell you one concept that is very polemic. It has to go with the date of expiration of the currency. This is a concept that economists have been studying for many, many years. What I'm saying now is not crazy. It's been under discussion, it's been under study. This can push consumption, this can be used for subsidies, this can be used for anything in terms of, we will think of a currency with a note with an expiration date. Very clear, meaning if you don't use these 10 pounds until the end of the month, they are gone, evaporated. Digitally, with the technology that we're talking about, this is the future, but it's the future today. This is the reality. It's doable.
Yeah.
John, can I just add, I mean, some of the buckets that these fall into for people understand this is digital fiat. It is an alternative. It is a government-sanctioned digital fiat. That's all it is for many people. That's where most people, a lot of interest is, particularly for governments. There are stable coins. Consider them in some of the on-ramps and off-ramps into digital fiat and into cryptocurrency. They're usually backed by something. They don't have to be, but they're usually backed by something. So they act, as the name would suggest, they're a stable way to be in and out of this. Then you think about cryptocurrencies themselves, most obviously Bitcoin, where people are attributing a value to that. And then you move on to a wide variety of things, utility coins or otherwise. But again, it's the use case where people see it. In Bitcoin's case, often people are buying it because they see value in it in a long-term hold. that's the way they sort of view it in that currency. So it's a question again of which use satisfies you there. Day-to-day transactional currency, onboarding participation in the ecosystem, maintenance of value. So it's you pick your own, you choose your own adventure in that realm.
Excellent. Look, that's two great perspectives, and I think that's really setting the scene well here. It's leading on to the next question now. I'm just going to ask Camilla just to comment on this, but is Bitcoin being a disruption to the legacy payment systems and banking as being sort of that core regional provider of payments? Camilla?
Yeah, I just have to add quickly to what they said before, because one thing that I find is like you have to take into that so many people, when they talk about Bitcoin, they're not talking about the stable value, they're talking about an increasing value, and they do use it as speculation. And I think that is where the trust goes out the door, and the trust is such an important component that we started this with. So if Bitcoin will be a disruptor, I think if I look at from the payments perspective, traditionally payments weren't complicated. Looking back 20 years, banks was providing most of the payment services, but that looks very different now. So it's not really the domain of the banks anymore. It's payments providers sitting outside the banks. So that has already been a bit disrupted. And I think if we're looking how it's evolved, that you used to have when you went on an e-commerce site or something, I think, John, we talked about this before, that when Qantas launched e-commerce in the 90s, they had about, I think it was 2 or 3 checkout options. There is 15 checkout options now. So the consumer has so many different ways to pay. So yes, Bitcoin will be a disruptor, but it's a very crowded space. So how disruptive will it be? That is one to see down the line, I think.
Any other takers on the disruption level?
I'm going to suggest. Sorry, Monica, you go ahead.
No, go ahead, Steve. I'll come in right after.
I would make the point that it will be widely disruptive. A lot of the things that people concern themselves in the short term, 2 in particular. One, volatility. Volatility isn't an issue if you're using it for payment and settlement transactions. You go, the volatility that is the nature of organisations like MasterCard and Visa participating. They are now moving in and saying, if you don't care, we don't care. You can use this as a mechanism for payment. So the minute by minute and second by second thing, you can abstract away that risk is the one side. The other bit that is critical to the disruption effects here, which isn't yet here but is now closer day by day, is scaling. It was the case that people were happy to say it can't scale, but they're wrong. It might not scale at that first level where the primitive is, but now it scales on these things we've discussed, which would be second layer sort of solutions, layer 2 solutions. You can abstract away that challenge as well. Scaling will come at the expense of something else, potentially privacy or potentially some other element that you would hold true to the core asset, Bitcoin, for example. But those things are being built out. So if you address issues of volatility, which can be abstracted, and scaling issues, which are being built out, the question then becomes, what are then the implications for existing payment rails?
Yeah, and I have to add also, convenience is always one of those first drivers, I think, for adoption. So, Monica, did you want to say something also?
Camilla, I just wanted to probably underline what you said a little further. So Bitcoin has actually become an asset class for many of the young investors, especially the millennials, who in the last year were trading just to ensure that they were able to build a reliable portfolio for them and, the whole independence of fire. Now, my question around that was, I thought that this was going to be a trend, but if you look at what has happened in the US and you understand the whole funding valuation game and of course the number of funding dollars that are now available, and you tie in that trend of how capital is available in the global economy overall, the question really is that happening because people want to find a reason to invest and to be able to retire early and to be able to register profits, which explains the volatility which was created by the scarcity of Bitcoin and all the other stable and other coins that are actually available. And of course, a lot of the big influencers underlining their support for it. And of course, I'm sure that the volatility is also associated with some of them doing something on Twitter which actually impacts the Bitcoin price. But having said that, the bigger question about Bitcoin and acceptance and disruption is if Visa, MasterCard, and PayPal put their weight behind this currency and this form of, I wouldn't call it an alternate rail, but definitely a rail that enables transactions to happen and value being exchanged, then the question really is, it's not a matter of why, it's a matter of when the disruption will start formulating itself in existence in major countries where Bitcoin regulation has not been formulated. But the support of these three giants actually puts me in a position to state right now that the long-term plan seems to be there for everybody to participate. The value and the extent of participation, however, is still not clear.
Excellent. Thanks, Monica. I think, yeah, we've definitely seen that over the last year, that acceleration, and we're sort of, we can feel it in payments, definitely, that things are shifting and changing. I'm just going to change the discussion a little bit here to bring it right back to a really core important topic around cross-border payments that we're involved with at EPA, with the FSB's cross-border project, which is run with G20, and it's a 4 to 5 year project, but it's certainly looking at the key areas of cost, transparency, access, and efficiency across, when we talk about cross-border payments. And I guess I just want to throw this one out there as a general discussion point. And look, maybe I will just refer to Camilla again, just to give us some context how we look at this topic from the payments perspective. And then if you could chime in and give us some more flavor to this, please, the rest of the panel. So Camilla, please.
So I think what we found in the recent submission is that all those measures, the transparency, the cost, the efficiency, they're very hard to measure in our submission. It's hard to implement, it's hard to measure. And if we look at the nature of blockchain or Bitcoin, they actually can solve for lots of those things. So I think here Bitcoin can actually make a big impact and change things a lot. And I also think that it will be this influence, but coming back to the trust issue, because it can't really be seen as a consumer grade payments system today. So it needs to be more trust, but what we're seeing is that it's changing so quickly. So when we talk about will it solve for cross-border payment, I think the big word in there is yet. It can't do it yet, but we will see huge difference coming.
And John, from my perspective, this technology is born global. This is one of the challenges that jurisdictions have. They think the squiggly line that differentiates Australia from the rest of the world matters. It doesn't. The true situation here with respect to this is this lives on computers. It lives on nodes all around the world. So, it's already the case that it is global. The regulation that we're seeing really sort of pick up speed is not because this doesn't work. It's because it works. So the things that are challenging governments at the moment are more fundamental issues than the tech. It's, can we KYC these people? What is the anti-money laundering situation here? What's the counter-terrorism financing challenge here? That's where the regulation is focused. It's saying, hey, this is everywhere and nowhere. So how do we track this? That's the thing that I think in traditional business people lack. They're focused on the narrative that says this thing isn't, and they go, in fact, it's all these things. The regulation is moving very quickly because it's out of the box. And now, quite rightly, I think in many respects, governments are saying, how can we identify these things, give some confidence that these aren't going for illicit purposes or otherwise? And that's a fundamental exercise in KYC and cross-border coordination in a way that I think hasn't otherwise been something that nations have necessarily done, but they will need to, they'll be forced to do that because of the evolving nature of the technology.
Let me, John, I agree with Steve and Camila. But let me tell you something, guys, and also this is open to the panel and it's open also to the audience. Let me tell you good news. Banks are not going to disappear, guys. Not in the short, not in the medium, not in the long term. And let me tell you two historical issues that I think that are very important to understand historical situations that we cannot compare to COVID, of course, but we can compare to historical moments. And the first one is 1944. In 1944, something happened. The US realized that hold almost all the gold of the world, because all the countries moved the gold, protecting it. And then America realized and called everybody to Bretton Woods, and everybody agreed to move the gold pattern, the gold as a measure of controlling power globally, to the US dollar. And when did that finish? That finished in 1971 with Nixon. Nixon decided that the gold and the US dollar was not going to be pegged anymore, and lifted and created new rules around the world. Compliance, guys, transparency and compliance. I always speak about this new concept of transpliance. That is something that is going to be part of our lives. And let me tell you one more thing. 1973 in Belgium, what happened there? 200 banks got together and decided to create a SWIFT code system. And the SWIFT code let the banks start speaking the same language. The SWIFT code is the computer, even today in 2021. You sit down on a computer and you talk banking, you speak banking, and you make transfers. That is not going to change in the short term. However, I agree with Steve. Bitcoin, it's a game changer too. And Bitcoin let everybody or let people sleeping to wake up and think of how could this happen and what are we going to do now? But I also tell you that the China Interbanking Payment System, that is the SWIFT code created by PBOC and SWIFT code itself, based in Belgium in the European Union, signed an agreement the 15th of January 2021. What I'm talking about here is that today you can make payments globally, both in renminbi and US dollars. Most of even the digital applications are not even aware of this. And I totally agree. We are living two separate worlds, but we are going to continue working together and living together. The big issue here, and there is where I agree with Camila, governments. Governments will have a set and governments will decide whether Bitcoin and crypto and decentralized currencies are legal or not. Either you take the position of El Salvador, accepting crypto and Bitcoin as a legal tender, or you accept the position of countries like Nigeria, where it's totally illegal, even to carry crypto wallets in your mobile phone. So this is where I see the next 2 or 3 years, even maybe the next year, all the central banks going and taking measures.
Monica.
Sorry. I was just going to say, can I add slightly, not only a different point of view, but almost inflame the debate? Because, I mean, I'm going after Maxi, so it won't be relevant, that the segue is perfect for me. So he mentioned transpliance. Now, in many countries across the world, which are not the US specifically, these are very regulatory driven, almost government driven, and India is a perfect example. So exactly to what Max said, I don't think there is ever going to be a case in which the governments would like to play outside the realm of what they already operate in. And the lack of transparency, at least the lack of oversight for them, is actually the only reason why they would want to enter into CBDC, the way I look at it, because there are alternate forms of digital payments which actually help sensitize a currency into digital format, which is also very relevant. However, for the cross-border piece, I'd just like to offer an alternative that I think is going to emerge because MasterCard and Visa are also putting their weight behind it, which is a faster payment rail, which India has already taken an absolute lead in. Now, UPI is going international. For those who don't know UPI, it's United Payments Interface, which essentially works on the same settlement system in terms of the overall high-level paradigm, which is nodal accounts being maintained and ledger balances being happening in real time in order for the transactions to look like they're real-time transactions. So the question really is, what does Bitcoin or any other form of crypto offer in terms of real-time payments that another payment type cannot necessarily either provide or disrupt? And with the cross-border transactions coming in and hubs being created, which are also something that China is participating in with many trials, there is PayPay, there is Singapore and Thailand have already participated and registered their first transaction. I really do have to ask the question only, not just for academic sake, but what is the actual value chain disruption that we would see?
And John, that's one of the things for me, you can see already, I mean, the reality of where we're going in many respects, you can see. If we talk about decentralized finance as a good example, let's put to one side the issues of KYC, AML and the like. Just let's assume for a second we can identify people to a satisfactory level. Decentralized finance is seeing the pooling of funds in a way we've never seen before. I mean, that decentralized finance total value locked, one of the measures they use that says how much money is already staked in these communities, has gone from a zero base about 18 months ago to about $90 billion today. And that's people committing to these pools. So the ability to sort of have money coalesce is something will be an extraordinary thing for financial institutions to have to deal with, because people will be able to put money in and to be incentivized to participate. That's one thing. The other bit is that money comes in, and the technology that facilitates that, it's open source. You can build on these things. The reason why people talk about them as financial Legos. You can take this without having to say to a financial institution, hey, can we get a business development relationship going? You don't need to. If you take that Lego and you can build on it, build on it. So you have this convergence of money that sits in these things, which is disintermediates the banks, that is the depository sort of system in many respects, and technology, which has no barrier to entry. But what's the implication of that as those things move together? That's the direction that we're going in, and we're a long way from that being coherently put together, but that's the direction. Open tech and funding that has never existed in that way before.
And the gluing regulation work in the middle there, something, it's always that bit that we need to get in. Otherwise, those sides will never be able to talk.
Exactly. Yeah, no, that's some excellent perspective. So we've really got, there's been another wide range of views here, which is clearly showing there's so much movement. But on that regulation, that was the next question I wanted to touch on here. And so just by the way, we have a few questions coming in on the Q&A. So please keep them coming. We have about 15 minutes at the end to answer those for you. But just on that regulation. So when we look at regulation, and particularly just focusing in on the new age, the blockchain of payments side, we're looking at mining, looking at exchanges where the movements happen, looking at the actual transactions themselves and the holdings. There is some thinking here that some of this, some of this pillar, some of these aspects cannot actually be touched because of the decentralized nature of something like Bitcoin. What's the panel's view on this? Should it be touched? Can it be touched? What are you seeing as the trends in this space? And because obviously we spend a lot of time in payments looking at these regulations, and we're knee deep or neck deep in it, and it's an ongoing, time consuming exercise. What's ahead in blockchain of payments?
John, I don't think it cannot be touched. It has to be. I mean, the reality here is, water finds a way here. So I think what I'm seeing globally with respect to the way regulation is moving, the critical element is they first need to figure out what bucket it fits in. And in the US, we talk about securities. In Australia, we talk with, is it a financial product? Is it a commodity? Is it a utility token? Across a wide variety of jurisdictions, people are struggling to categorize them. So even at that basic level, the regulation of the technology and implications, the first question is, what is it? And that is a live conversation across jurisdictions. So right now, if you take the approaches that are coming out of the UK through the FCA, EU in MICA, China's doing it a particular way, which is very different to the rest of the world. The US is fragmented, but innovative in parts. Australia is doing its thing. And watching Singapore move. You go, all of those jurisdictions are trying to figure out where it fits first. And then in doing that, whose responsibility it is. And ultimately, that's what's happening. In the US, the SEC and the FTC, or the CFTC, said it's a bit of mine, it's a bit of yours. And FinCEN says the same thing. In Australia, ASIC says something, the ACCC say something, APRA will say something. So again, people can't quite figure it out. And it comes back to the nature of the technology. It's cross-border. It intersects very many aspects of people's lives. So at 1 minute, it is a consumer issue. And another minute, it is a financial product issue. And then another minute. So the question is, whose responsibility is it? That's why it's a mad rush for jurisdictions to try to figure out how to regulate this space.
Any other takers?
Let me add one more thing, guys. I agree with Steve totally. And my vision is that either IMF or World Bank or any of the multilateral organizations, AIIB, maybe here in China, will have to take the lead on this. And this is where I come back to Bretton Woods. We need a global agreement on governments, on especially maybe the UN with the 5 largest countries in the world. They need to sit down and agree. This is my view, my personal view, because otherwise we will have everybody trying to do their own game. And in the end of the day, the key aspect here, Steve just said it very clearly, cross-border payments, supply chain cross-border payments. And blockchain comes here also to stay. We banks are going to continue working in the market for many, many years, but blockchain will be there too. Blockchain brings to the capability of many players to predict and many players to follow up, many players to analyze who is who. We will know our clients. That's another thing that I totally agree. KYC is a very important thing. So I don't want to be negative towards Bitcoin and crypto, but I don't think there is one single government around the world that is happy not knowing where the money comes from and where it goes. So this is my taking on this and my contribution.
Great. Okay, well, I'll just jump on to the next question. I know, Max, you've talked about economies adopting Bitcoin, such as you mentioned Venezuela. And Monica, you and I were on a Clubhouse on the weekend, and you talked about Cuba now going into this, recognizing Bitcoin as well. What is the trend? We've got one country's done it. Now we've got Cuba following. So is this a trend?
Well, I can go. I don't know, Monica, if you want to go on that. I can comment that very quickly. Bahamas was the first country in the world to adopt CBDC, central bank digital currency, no crypto. And El Salvador, of course, Venezuela. El Salvador adopted Bitcoin, and Venezuela. Yesterday night, I was in a discussion here in University of Chiao Tong, exactly talking about that. Venezuela has two parts. Number one, the petrodollar. The petrodollar is crypto. Yes, it was issued 3 years ago to avoid the sanctions of the embargo of the US. Do you know, guys, if you make any transaction with any company in Venezuela, your bank account, your SWIFT code will be canceled almost immediately. So almost nobody is making TT payments to Venezuela. However, with petrodollars, you can do using exchange platforms. Now, Venezuela is trying to adopt, that is going to happen in the next 2 or 3 months, central bank digital currency. The big question with this is, okay, is this central bank digital currency going to work only inside Venezuela, or is going to be accepted for cross-border payments? Who is going to accept and who is going to receive?
Yeah, excellent point. I think we've lost you a little bit there, Max, but thanks. So we're still losing you, Max. We'll just digital. Well, does anyone else want to comment on that? As we jump to the next question, we're going to open it up to the Q&A shortly.
John, in countries like El Salvador, remittances are a massive issue. It's inefficient. There's so much money goes to intermediaries. You go, the case for this kind of technology is enormous. You go, do you want to transfer these things at marginal cost? And this is the Bitcoin use case at its core. Can I transfer $1 billion worth of value? Yes. Can I do it within 10 to 60 minutes? Yes. What will it cost me? And it might be $50. How else do you transfer $1 billion? You go, with certainty that it arrives. You see it at both ends. You go, that's the thing that for me is the disruptive element. And it's one thing to ignore that in the context of a country that has real challenges because so much money is lost. And in a country that has GDP that is at the lower end of scale, potentially the incentive to then claw that back is enormous.
But without sounding like a broken record here, but we're coming back to the same thing again. And now actually in the other angle, that now we trust Bitcoin because it's more trusted, the Venezuelan dollar. We're like, where are we? In what do we trust? So it all comes down to that culture and actually the message to the big institutions, because if we see, yes, what Monica said, a Visa, MasterCard, PayPal, if we start to see the banks backing it, the trust is increasing. And then it will not just be countries that has an issue with the existing currency that goes this way.
And Camilla, on that point, it's radical transparency. This is, again, the odd thing. It runs counter to the narrative of the nefarious dark web narrative. Every single Bitcoin and with these other chains like Ethereum, you can see it. You can see the minute it was created, and you can trace its provenance all the way through. It's uninterrupted. And it goes, so that ability to see it. Now, you might not be able to say whose it is, but you can see its course of conduct all the way through, which to Max's point in relation to CBDC sort of being developed out of China, you can see it. It was created and it flowed through. Where it stops is the last point it was. Now, that's the bit that I think, again, is lost with people. That history is perpetual. And it's a very, very different way to look at these things. That string of numbers and digits is a reflection of the entirety of the life of that dollar. That provides insight that we've never seen before, and certainty. That means we've never had that kind of usability before.
Yeah. And who, coming back to who will look at that information, how I'm using my money every step on the way? Do I trust it? Do I not trust it? John, back to you.
Okay, excellent. Thanks again. Great perspective. So, look, we're just going to jump into the questions here. There was 3 other topics I was desperately wanting to cover: the Lightning networks, the micropayments, and also digital wallets. But that's obviously got to be for another day. So we'll just hit the questions here. So, with the trend of the assets being tokenized on the blockchain, how will this impact the future payments?
John, collateralization is that's the 800-pound gorilla here. If you are ascribing value to a digital asset, and I use an extreme example at the moment, NFTs, NFT is suddenly the buzzword acronym. If you're ascribing value to that, and you want to hold on to that, your ability to collateralize that, and then find people that are willing to lend against that asset, that doesn't involve a bank having to tell you don't meet my credit criteria. You've got people that say this NFT of a crypto punk is valuable. We will lend against it. And we don't care because we know the asset is where we put the value. That deep liquidity is something that will fundamentally impact the way payments are done, because you don't have to sell the underlying asset in order to sort of get some value out of it. And again, when people have that moment as well, they say, "All right." So that's why it doesn't matter that Bitcoin is in various respects volatile. If you let me collateralize it, then suddenly I can use it. And that's the moment when people say, "Right, this will change things."
John, I think there is one more additional perspective. So none of the countries are noble globally, and I completely 100% agree with Max. If the countries globally need to take a stand, have solved digital identity verification. There are companies who do it on a country basis, they do it on a region basis, but the protocols are different. And if anything happens, and what COVID has showed us is that there needs to be a global management. And so tokenization and aspects of tokenization, especially on blockchain, and the ability to be able to digitize assets that you and I really need to manage and still be able to hold, but at the same time need to validate at various, and it's not just payments, it's about a various number of issues and challenges that happens when anything is cross-border. So beyond payments as well, this will continue. So the tokenization question, great one, but I think the ability and application will be much further beyond payments.
Interesting. Great. And look, just the next question then, and I'm going to pitch this one to Max directly. Max, are we going to see one set of rules, or is it going to be local, regional?
This is an excellent question. The experts in this area are discussing 3 possibilities.
Frozen again.
With this global connection of digital currencies, both decentralized and centralized. Number 1, a total connection using the same technology. On the other extreme, total disconnection with going back to the medieval times, where people didn't even have the telex to make transactions. And in the middle, the possibility of having third parties making the transactions. In my view, we are closer to the first position, a total global agreement and a total global connection. And let me tell you one more thing about why do I think about this. When we go back to the 70s, the Cold War was a war. The connection between the US and was almost
I think we've lost you again. Oh. I'm dying to hear this.
Today, we have a total connection. When people tell me about what do you think about China, US commercial war, say, which war are you talking about? It can be some disagreements, but we have a total connection. So again, I think that the 2 key players will be China, US, and of course, the rest of the big countries, the BRICS countries, Brazil, Russia, India, South Africa, the other 4 of the BRICS, and of course, Australia, we have a strong part. Europe, we cannot forget about Europe, and some countries in Latin America. So I think that we are closer to go in the direction of a total integration.
And I think that reflects what we're seeing in the G20 work around the cross-border payments as well. It's very much on this theme. How do we get this moving forward at that global level, really?
Can I just share one thing, because I actually have to jump early also, however interesting this is. So referring back to what John's saying about the project on the enhanced cross-border payments. So we had the discussion of in what order we should talk about the different topics, because there's so many impacts on that, it's different building blocks. And in our next meeting, we're actually going to talk about CBDCs. But we said, like, if digital currency and if this actually comes to the forefront and is solved, we can stop talking about everything else, because it's such a huge pivot, but it has to come. So I agree, it has to come as global measures, of course, but it has to be accepted across regions because it flows across regions. So I agree with previous speaker, I can say. And thank you very, very much, because I have to jump early. So I'll listen to the next answer, but I'll go.
To Camilla's point about that, I mean, we haven't mentioned it yet, but a very good example, something that scared many, many people, scared governments, scared businesses, scared financial institutions. When Facebook said Libra, Diem, Novi, too many names to keep track, when they said, by the way, we can do private money, you can trust us, we've already got a 2 billion person user base and everyone likes their UX. And suddenly people realized how easy it would be to have a button on Facebook that you could press and have money go to someone else on the other side of the world. That absolutely put a rocket up people, and we saw within a matter of weeks that Facebook were called before US Congress to explain this thing that might actually cause instability in the greater financial system ecosystem. So that was the bit. UX was right. So it's funny, from some respects you kind of go, that was why Facebook scared people. Its scale said its user base was ready, and even if a small fraction of the 2 billion people used it, what does that mean for private money? So that means we're getting close again. This is that government challenge. That can happen.
It's the crux of this conversation today, Steve. Absolutely hit the nail on the head. Great. The next question, I think we've already covered, so I'm just going to suggest that the AML and cross-border, we've already touched on that. But the next one is about the differentiating or understanding Bitcoin as store value and the application platforms. And I absolutely agree. I don't feel that we've got the time to give this one the coverage, but let's accept it. I think that the digital, or say the cryptocurrency world, and that is a whole layer of technology that, as Steve said earlier, we've got to embrace it now, and we've got to start understanding this new world. So I will just skip through this one as well. Okay, so with the race to establish the CBDCs, wouldn't there be privacy or interoperability issues using in different countries? A great question. It's something we think a lot about. Max, where is it going to end up? And I think Monica, you're going to talk about this too, because I know it's dear to your heart.
Again, thank you for the question. The big window for CBDC for everybody will be the Winter Games here in February, 4th of February, 2022. In the Olympic Villa is one of the fourth area of the pilot program. The other one is Suzhou, the third one Chengdu, and the fourth one that was the first actually to be launched is in Shenzhen in the south of China. So in my view, as long as the pilot continue in this direction, that is working extremely well, over 30 million people already adopted it, will be widely adopted in, for example, payments of employees working for the government and other kind of transactions. So the big question again will be, how are we going to be able to enable cross-border payments? Monica said it very clearly. Many countries are already collaborating with the Institute of Research of PBOC, Emirates, Thailand, Malaysia, Singapore, and all of them are, Hong Kong, well, part of China, of course, but Hong Kong is evaluating how to do these cross-border payments. And there is where I see the near future. And the rest of the countries are evaluating. We just had yesterday the head of the Central Bank of India making a video, CNBC News, explaining that India is starting also the pilot program of CBDC. So definitely every single central bank around the world has this in the agenda. And I agree with you guys. I think that Libra itself, when it was announced, and in the way it was announced with 18 global players, try to move this attention of where the government issue the money to a world where the private companies issue the money. And this happened already. It's very important that we see what happened in the past. We try to study history because this is the reason of why central banks were created. Guys, if we see what was the world 100 years ago, the issuers of notes were not the governments, were the private banks. The private banks issued money. In some countries, that is still happening. But then later, the governments realized that trust was something that had to be provided by the state. And the banks created by the state, the central banks have been created after the crisis of 1929 and the years after that. So I think that Libra triggered probably many governments realizing that could be an issue if private companies try to take care and start issuing currency. So going back, John, I see compliance, transparency, and a lot of regulation coming into effect.
Great. Monica, last words, because I'm going to wrap up on this question and we will get back to everyone on the questions outside of this.
Max has said everything. Just one thing, that I'm sure the networks are not going to be left behind. They'll definitely try to make sure that they're part of this. Having said that, I think the governments here have already taken their stand. If the nations come together, especially the G20, BRICS, of course, China, US, I think there should be an ability for us to test out cross-border in terms of the largest countries by GDP and then by population, and be able to see how this will actually work out. And then the adoption can happen.
Excellent. Yeah. Thank you. Great. So I'll accept these as closing comments at this stage. And look, there's been a really fantastic discussion today. We will answer these questions in the chat on the event on LinkedIn, where I think most people found this. So we'll run through the rest of these questions. I see the next one. I think the next couple Steve has already covered in terms of the scale. A lot of interest in in Bitcoin. There's so many ways that we can approach this subject. It's never going to be covered in 1 hour. But look, we started today. And I will encourage people to get, if this is your first time considering this topic, now's the time to start reading up on it, because there's some great books out there. One of the books that I've found been very helpful is The Internet of Money. We'll post that along with a number of other books in the events schedule as well, which are definitely worth reading, and start to expand on these topics and what we've seen in the questions as well of what the audience. So thank you to that great panel. It's been great working with you today, and look forward to continuing this discussion with you all. I will say that we do make a contribution to our charity around helping those who are less privileged in the education space. So you have all contributed to that today. So thank you for that. And I will now just wrap up proceedings, and we look forward to speaking to you again, and we will be in touch regarding future activities in relation to this really important subject. So thank you, everyone.
Thank you all.
Thank you very much.
Thank you.